Joining me now to help break us all down is Jeff Krumpelman. He's the Chief Investment Strategist and Head of Equities at Mariner. Welcome.
Thank you. Yeah, it's good to be here.
All right, so the September jobs report just came out a little over a half hour ago. What are your takeaways?
Well, I think the number 119,000, which was more than double what was expected, while it's stale somewhat, news, this is September, it's just reassuring. There were a lot of folks out there that were very worried about the labor market. And I think it just really reaffirms to us that things are not as bad as advertised. We had other data that was saying, people aren't really laying off, they're just not hiring as much. We know this is more structural. The Fed's talked about this quite a bit. And quite frankly, if you look at wage growth, unit labor costs, and just growth in real wages, that's supporting consumer spending. And we should expect payroll growth to be a little bit lower than it has been with deportation strategies that are in vogue. So I think that it just took worst case, oh my God, things are really falling apart off the table for a second here.
How much weight do you think this report has going into the December Fed meeting?
I think that they were probably biased not to cut in December anyway. And if there was any kind of, doubt, and you could see this in Fed Fund futures, where I think now we're down to, to like 25% odds that we get some type of cut, I think that just solidifies that. And the Fed chair, he was pretty clear in the presser that you had disparate views, with many people saying back in October, I'm not sure if we, should really cut. So I think it just, probably locks in nothing in December.
And the Fed meeting minutes were released yesterday. What is your takeaway from those?
You know what? I listen, whenever we have a Fed meeting, I listen to Fed Chair Powell quite a bit. And all it did was just solidify everything that he said in that Fed presser coming out of the October meeting. That we've got people that look at different things, very smart people on the Fed committee. Some, though, are looking a little more at the inflation risks. Some are, more biased to look towards downside on the labor front. And you got people in the middle. And when you get that kind of disparity, you kind of come with measured decisions. And it's not locked in that we're going to get a December Fed cut. We're data dependent. And I think that's exactly what the minutes said. The minutes came out, as far as I'm concerned, at that presser.
Yeah, and I know historically we usually see markets dip when that, chance of a rate cut is taken off of the table. We did not see that yesterday with the release of this report. Why do you think that is?
You know what? We were talking a little bit in advance of this interview today, and you should be working as an analyst. You said NVIDIA earnings. I agree 100% with your comments on that. Yeah, we just had a wonderful report. Walmart's news was pretty good also. So at the end of the day, the market will have psychiatric moments about, oh my gosh, what's the Fed going to do? But it's about economic growth and earnings. And earnings look pretty darn good.
Anything else you're keeping your eye on for earnings?
In terms of additional reports, I think it will be interesting to see what the retailers, do report. And if we see, I think it's more of a industry-specific areas within. Is it leisure? Is it where do you want to be positioned? But certainly, as these retailers report, we'll be watching for weakness in the part of consumer. Quite frankly, I would be just fine if we had target of 6,600 for the S&P 500 by year end 2026. That's right where we're at. So it might make us look pretty smart if we just settled in here. But quite frankly, we've had decent earnings growth this year. And we don't need a melt up in here over euphoria about Fed rate cuts and policy stuff. I think that if it just settled in for a couple months or quarter, we'd be just fine with that.
And as we reach the end of 2025, what sectors do you feel like we should be focusing on?
The idea of tech just being overdone, I think is overdone. Bubbles, I think the bubbles and the references to bubbles. I would be still in semis. I wouldn't be over concentrated, but I would have exposure there for sure. And NVIDIA still is not expensive, but there are a number of semi names. I think that there are areas within technology that have been ignored. Software, you've got names like ServiceNow that are off 20-25% this year, and they'll benefit from next-gen AI as well. I also think healthcare and energy, some of these ignored sectors look pretty interesting to us, particularly healthcare. And as we go into midterm election year, where you get greater drawdowns, offensive defense, if you will, there are catalysts to drive those names, and yet they're cheap.
All right, Jeff Ruppelman, Chief Investment Strategist and Head of Equities at Mariner. Thank you so much for joining us at the New York Stock Exchange.
Thanks for having me.
In person.
Yeah, this was fun.
Good to see you in person.
Thank you.
Coming up in